Every time you trust a stranger, somebody charges you for it.
You're
This is the
buying a
bill.
used car from someone you found online. The price is $8,000. You want the keys before you hand over the cash. He wants the cash before he hands over the keys. Neither of you is being unreasonable, but neither of you can safely go first. So you invent a third person. You both drive to a bank, or hire an escrow service, or meet in a police station parking lot. The arrangement works. The transaction completes safely. But that safety costs an afternoon, a service fee, and a small amount of anxiety. This uncomfortable micro-friction between two strangers serves as the atomic unit of the entire global financial system. Scale that interaction up. Every international mortgage, every credit card swipe, every supply chain invoice crossing a border is the exact same standoff, playing out billions of times a day. We live in a world where sending a photograph or an email to the other side of the planet is instantaneous and virtually free. Yet, sending value remains incredibly slow and expensive. That delay happens because sending value requires a massive, labyrinthine web of institutions that exist entirely to vouch for other institutions. In international shipping, banks manually verify paper letters of credit before they will release a payment. The friction we feel in the economy rarely comes from the raw mechanics of moving money. We are paying the immense cost of getting strangers to trust other strangers. Let's put a hard number on that friction. Take a worker in the Gulf sending a $200 remittance home to their family in South Asia. According to the World Bank, the global average cost for that exact transfer sits stubbornly at roughly 6%. That's $12 taken out of a $200 transfer, and it often takes up to 3 days to clear. Moving the actual digital message across borders costs a fraction of a cent. So what exactly is that $12 buying? It buys a chain of compliance checks, correspondent banks, and cash-out networks. Every step verifies the previous one. Every step takes a margin, and every step holds the money briefly to protect their own liability. This chart shows the architecture of a transaction fee. Every time you pay a trusted intermediary, you are paying them to do 4 very specific jobs behind the scenes. First is identity. Somebody has to collect documents and verify exactly who you are, so that if you commit fraud, you can be tracked down. Second is custody. Somebody has to hold the value in escrow or sit on the float while the trade officially completes. Third is verification. Somebody has to do the manual labor of confirming that the shipping documents are accurate or that the promises were kept. And fourth is recourse. Somebody has to maintain the courts, chargeback systems, and insurance required to fix things when a deal inevitably breaks. These 4 bureaucratic layers are the invisible weight dragging down every transaction on Earth. All 4 of these jobs exist because of one missing capability. Humanity cannot independently verify the state of the world. You cannot look directly into a stranger's bank account to see if they actually have the funds they claim to have. You have to rely on a middleman who can. But then you have to trust the middleman. Ensuring they aren't lying to you requires heavy regulation, frequent audits, and insurance policies. The cost of all that oversight inflates the consumer fees you pay. In modern finance, trust is not a moral virtue. It is a highly regulated, highly expensive commercial product. To be clear, those 4 jobs are real, vital work. Deposit insurance and identity checks genuinely protect consumers from theft and fraud. A system without intermediaries is a system without recourse. If you send a payment to the wrong place, there is no chargeback. Nobody is coming to help you. But this heavy institutional machinery comes with a devastating side effect. Right now, roughly 1.4 billion adults worldwide remain completely unbanked. They are excluded because marginalized groups simply do not generate enough profit to justify the massive cost of the identity and recourse bureaucracy required to serve them. The ultimate price we pay for relying on institutional trust is systemic global financial exclusion. So the ultimate bottleneck in the global economy boils down to a single phrase: take my word for it about who owns what. If humanity could invent a way to independently verify who owns what, without paying a middleman for their word, which of those 4 expensive jobs would we no longer need? Answering that question requires us to look closely at exactly where and how ownership is currently recorded. Tomorrow, we'll examine the ledger itself. We'll discover why the most important detail isn't what is written inside it, but who is allowed to hold the pen.